Good afternoon, everyone. Welcome to Vantage Markets Australia's 2025 Market Outlook. We're going to cheat a little bit. We're going to do a little bit of last year. We're going to wrap up what happened, the big stories of the markets from 2024. Then we're going to have a little bit of a guess more than anything else about what might happen this year in financial markets, looking for broad trends and hopefully give you guys some ideas on where you might be able to make some money. So just before we kick off, this live stream is hosted by Vantage Markets' private client team. That's me, Jeff, in Sydney, and Mark in Melbourne. G'day, Mark. How you doing, mate?
Hey, Jeff. Good, mate. Yourself?
Oh, mate, I'm outstanding. Always good. Always good. So today we're going to be talking about, like I just said, last year's themes from 2024, the emerging themes from 2025, and as a little bit of a spoiler alert, we had a pretty big hint about that over the weekend. Then we're going to go through some of the major markets and talk specifics. We're going to knock backwards and forwards between what's going on fundamentally and then also some technical levels for you guys to keep an eye on. And then if there's anyone on this live stream that wants to ask us a question, we'll open it all up. Anything market related. Don't ask personal stuff. All right, so there you go. Mark, did you want to go through last year, mate?
Yeah, sure. So I'll be covering last year's themes. The biggest themes of last year was firstly dollar strength. So in the first quarter of 2024, the US dollar slightly strengthened as uncertainty over interest rate cuts was the main theme. As of July, the US dollar sold off as the Fed signaled they'll begin loosening monetary policy, which is another way of saying they'll be lowering interest rates. We did see a sell-off in the dollar as of July. You can see on the chart there. And then shortly after that, we actually did see the US dollar strengthen. So with that one there, before it actually strengthened, the markets were actually anticipating at least 7 interest rate cuts. And the Fed actually changed their stance on that. So basically, in the last quarter, we saw stronger than expected payrolls data and an uptick in year-on-year inflation. So in October, November, and December, and the Fed changed their stance on interest rates in December as well. Basically, Jerome Powell shifted his stance, signaling the intention to hold rates for longer due to the uncertainty around inflation. So we did see the US dollar rally here on the back of that. So basically, higher interest rates or speculation of higher interest rates attract more capital flows from investors seeking higher returns on their capital. So this basically drives demand for the US dollar. This is what we saw there on the chart. And it's the opposite for lower rates. So lower rates or anticipation of lower rates drive capital flows out, causing less demand for that currency. So that's pretty much how that works. And that's about all for the US dollar. We'll move on to I'll go through the charts here I discussed before. So you can see here we've had an uptick in inflation for 3 consecutive months. That basically drove the US dollar higher, and it did change the Fed's mind in terms of holding interest rates steady for a longer period of time. And we also did see US non-farm payrolls here, especially the last couple of months, November, December, we did see a massive increase in non-farm payrolls. So the Fed looks at all this stuff and it does decide this monetary policy moving forward. So given these reasons, the US dollar did strengthen like you saw in the chart before. Moving now on to gold. So gold has made significant gains in 2024, as you can see there, the horizontal line. So rising from 2,000 in February to a high of 2,790 in October. There are basically several factors which did contribute to this demand in gold, which I'll quickly go through now. So what you can see there, low interest rate environment. So speculation of lower interest rate in 2024 increased demand for gold as the opportunity cost of holding gold decreases as other investments offer lower returns. This basically makes gold more attractive since you're not missing out on many yields elsewhere. Another reason will be geopolitical tensions or uncertainty in the markets. So geopolitical tensions and uncertainty in the markets were also a major factor which drove up the gold price last year. So investors basically turn to gold as a safe haven. Conflicts like the Middle East, the escalation of the Russia-Ukraine war, and more recently, speculation about tariffs contributed to an increase in the gold price. Furthermore, we also saw a hedge against inflation. So gold is basically used as a hedge against inflation. So we saw the central bank purchase it as well. So pretty much the way that works is so the cost of living rises. So basically, another reason for the increased demand for gold was like I said before, a hedge against inflation. So the way that works is the cost of living rises, gold value tends to go up, so helping to preserve purchasing power. So central banks did play a part in this as they increased their gold reserves, contributing to the growing demand. So that's why you saw this, gold price hit those highs. And we'll move on to Europe now. So we did see low GDP growth in Europe, tracking at under 1% in 2024. These figures were basically weighed down by Germany's GDP, which is Europe's largest economy and accounts for about a quarter of Europe's total GDP. So we basically saw negative growth in Germany as the economy did contract by 0.2% for all of 2024. Other factors that did contribute to low GDP in Europe, lingering effects of the energy price crisis caused by the Ukraine war, high inflation, cautious consumer spending, fiscal policy tightening, declining business confidence, and concerns about geopolitical uncertainty. So that were the main factors here that did contribute to this slowdown in GDP. We'll quickly go to what's happened in China now. So China's GDP has actually been stable. However, retail sales and consumer confidence did drop off, which saw basically a slowdown in spending. Another theme of 2024 was briefly discussed before, easing monetary policy. So most central banks started cutting rates in 2024. The US, UK, Europe, and Canada moved faster than others as we saw a more significant contraction in their economies and a reduction in inflation. So Canada's sitting on 3% at the moment. Europe is sitting on 2.9%. US is sitting on 4.5%, and the UK is sitting on 4.75%. So so you can see this chart here where it's showing interest rate cuts being cut multiple times by the Federal Reserve. So you can see the 50 basis point cut in September, followed by 225 basis point cuts in November and December. And that's pretty much all for the themes for last year, Jeff. I'll pass it over to you to cover 2025.
All right, good.
This year, I should say.
This year. All right, so just as a heads up to everyone, we were hoping to do this a little bit earlier in January rather than kind of the first opportunity in February, but we were waiting for Trump's inauguration to see what US policy would look like. It would be really tough to do the emerging themes for 2025 without talking about this man. Donald Trump. We couldn't find a picture of him doing the Elon Musk Hitler thing, but that was close enough. Trump, as president, has already made a lot of headwinds. He's said a lot. There's a lot of wind that comes out of Trump's mouth. He did the same the last time he was president. He said a lot of stuff, most of which he didn't do when he was actually elected. But so far, he's actually been really reasonably busy, considering he's only been at the seat for the last couple of weeks. The one of the, I guess there are kind of four major tenets on this with Trump. First one is he set up that Department of Government Expenditure thing that's being led by Elon Musk. They are looking to cut government expenditure. Looks like there's two main ways to do that. He's told everyone that works for the government that if they're not going to work in the office full time, they're fired. So that'll cut some expenditure. And B, one that I saw this morning is that it costs the US government 3 cents to make a 1 cent coin, which is obviously just sheer genius. So I think what you'll probably find is that they'll get rid of the ones and tens, just like we did here. No one really uses very much legal physical tender anymore anyway, so getting rid of the little coins is probably a good idea. So that's the government expenditure stuff. He's also withdrawn from the World Health Organization, which he tried to do the last time he was president, but it took so long the first time that it never actually happened. This one is probably going to take 6 or 8 months for them to actually formally withdraw. The US is the largest funder of the World Health Organization, obviously, because they're one of the biggest economies. It will be interesting to see what happens to that group when the US leaves. That was absolutely not expected. He's not been a fan of them ever since day one. There's also a massive push to get rid of the illegal immigrants, to the extent that that's what he's blaming the tariffs for. So Saturday morning US time, Donald Trump announced tariffs on Canada, Mexico, and China. He said that the tariffs on Canada and Mexico, which are set at 25%, is to stop fentanyl coming into the States, A, and B, to tighten up the borders because he doesn't want any more illegals coming in through either the top or the bottom. Just interesting to note that the tariff on Canadian oil, and the biggest buyer of Canadian oil is the United States, was not 25%, it's 10%. So there is a tariff there on the oil, but it is lower than general tariffs. Something else that I saw this morning that I thought was interesting is that the Californian economy is twice as big as Canada's. So how much of an impact this is all going to have, we'll see. I did see something in The Economist that said that these 3 tariffs alone should add 0.7 to the US inflation rate, 0.7%. So we'll see what happens. All 3 have said that they're going to retaliate. So they're going to whack the same tariffs back on the states. And then we get into these, anyone that was around in the 70s, I wasn't, thankfully, but I've certainly read about it. These tariff wars where everyone keeps trying to beat each other up, and all the end result is that inflation goes up. The other one that he was, focused on was energy. He's pulled out of the Paris Agreement on climate change. So now the US as a country doesn't believe in climate change, which is fair enough. Pulling out of that will also pull funding from that too. So that puts the Paris Agreement on wobbly legs. There's a little bit of talk that Dutton might follow suit here in Australia. And I suspect that a few other countries are going to remove themselves from the Paris Agreement now that they've seen the US do it, simply because the Paris Agreement targets were, virtually impossible anyway. So there's not a great deal of reason to continue with that. So that's what we're seeing with Trump. Tariffs, no more concern about the environment and oil. So here's one on inflation. I guess, inflation gets bandied around, and in our Monday weekly roundup that we do every week, I'm always banging on about inflation. I just wanted to show this chart just to show how high inflation does get. This is US inflation over a long period of time. Me personally, I think we're going to get somewhere between 6 and 8% this cycle. Tariffs are going to be inflationary. This is just the first step in the tariff war. So he's put tariffs on China, Canada, and Mexico. They're going to match them. So having matching tariffs kind of puts you back at square one. So I suspect he's going to put additional tariffs on again. Tariff wars, not very fun for the consumer, because what really happens is that if you've got a Canadian imported product that is also made in the States, the local producers will simply increase prices to meet the tariffs. No one wants to be the cheapest at anything. So what they do is they maximize utility, which is the only thing that I got out of my economics degree. And they will increase prices to meet the tariffed prices. That's where the inflation comes in. So monetary policy, obviously monetary policy, as Mark alluded to, is, me personally, I think it's the biggest drawer of funds over longer and medium term trading. The currencies or the countries with the highest interest rates generally do have inflows. The US is kind of at an inflection point. My personal view on that is that they finished cutting and that the next move on US rates will be up. And I think that'll be in Q4 of this year. Japan raised rates last week. It was the second raise they've had after having zero rates since the mid-1980s. So Japan is kind of the only country at the moment that is increasing interest rates. And for those of you who play dollar yen or who look at dollar yen in the major currencies, that's why the yen has outperformed all of the other majors at the moment, is because of the rising interest rates there in Japan. The ECB in Canada is still going to cut rates. I think interest rates in both of those countries are going to go very, very close to about 1%. So there's still a little bit of a way to go there. In Australia, we kind of missed the boat on cuts. Michelle Bullock will probably want to hold her fire. If the Fed cuts again, which I'd say is probably a 20% chance, I think we'd see a cut here. If the Fed doesn't cut again, I'd say we've just missed the boat on cuts, and the next moves for interest rates in Australia will be higher. So that's this year. Let's talk about some specific markets, hey, Mark? So what we've done is we broke it up into gold, oil, equities, and whenever we say equities, we always kind of really mean US equities, currencies, and crypto. I'm too old to be very good at crypto, but we'll see how we go. And I've written notes, so please excuse the paper. For gold, my view is that it's going to be supported by the tariffs and the US inflation. Gold rose 26% last year. I don't think it's going to have a 26% year this year. I mean, who's left to buy it, right? So when people are long, they're long, and you can only be long as he's long. So that's someone that I used to work with used to say. So when everyone's long, it can't keep going up. I'd say the market is long. I was looking at the Commitment of Traders report on Friday, and the net longs far outstrip the net shorts on gold futures. I think central banks will continue to buy. I think central banks, with the inflationary issues going around, will be a little bit shy about adding to their holdings of currencies, and it would be a safer bet for them to buy gold. Last year, we saw China come in late and buy a little bit in, I think it was November. India had been a huge buyer of gold over 2024. We'll look for some announcements from those guys. Mark, gold?
Yeah, sure. Just share my screen. You see that, Jeff?
Yes.
Okay, so we did actually break and close above the highs here, which is a good indication that it may go higher. However, this candle here, depending on how this candle closes, if this candle closes like obviously like a bearish engulfing candle, this may actually be a fake breakout, and we might actually consolidate between this region here. So 2550 and 2790s roughly. So yeah, all depends on his candle close. I think that gold's overextended itself. You can see from this RSI here, we are seeing a bit of bearish divergence. We did have oversold conditions here. And if this candle closes in red, this likely will close here. So you would see some bearish divergence if you can draw it in like that. Yeah, so I think this will consolidate for probably about a few months before making new highs and heading its way up towards 3,000, which is about here. So towards the end of the year. What do you think, Jeff?
Oh, mate, I think it's going to get to 3,000 way before the end of the year. It's only about $200 away from that. I was saying $200 by Easter last week, and I feel a bit foolish about that. I think we're going to get there much quicker than that, especially now that it's all off to the races with tariffs and inflation. I remember I used to get the old investment bank reports, and they'd say the Aussie would sit in a 2 cent range for the year. I'm like, mate, it's not going to sit in a range for the next 2 months. Honestly, I reckon gold could get to nearly 4,000 by the end of the year. But having said that, it is volatile. It could fall all the way back down again. I'd rather be long than short. Let's put it that way.
Yeah, the way I see it is like gold from a 10-year perspective, gold generally uptrends. So if you go back to 2000, it was on $500. So it does generally go higher in time. However, you do get those consolidation periods, that could last for at least a couple of years, like you saw here. So yeah, but generally it does actually uptrend. You just got to get it at the right time, I guess.
I like those consolidation phases because all the gold bugs get really frustrated. It's hilarious.
Yeah.
All right, oil. Oil. You know what? I think oil's probably going to be more interesting than gold this year. OPEC has already said that they're going to reduce their self-imposed production cuts. So OPEC plus, now we have to say plus, is I think it accounts for about 65 or 70% of global oil output. And what they like to do is like to manage the price of oil rather than the amount of oil. So what they want to do is they want to maximize the amount of money they get per barrel of oil without making oil alternatives feasible. So the biggest oil alternative, except for batteries and battery powered cars, are, you know, they are what they are, but they're never really going to take over. The biggest competitor to oil is shale oil, which is oil that's been converted into rock. The biggest store of shale oil on the planet is in Canada, and I think us in Australia, we have the next lot. I think with current production costs, that particular type of oil becomes viable at around $100 a barrel. So what they want to do is they want to keep the price where everyone's still buying cars, where people are still staying away from Tesla and battery powered cars, and shale oil doesn't become productive and useful. Um, I think their self imposed production cuts roll off over the next 3 months, and they'll be gradual, but you know they're big producers that not pumping as much as they possibly can. So that should pressure price. The other dark horse is Russia. Russia's not allowed to sell any oil to Western countries at the moment because they're under embargo because of their little jaunt into the Ukraine. If that was to end, Russia would send a massive amount of oil into Europe because Russia is generally the biggest supplier of oil to Europe. So that would be good for inflation in Europe because they've had to import it all from elsewhere. And it would also be bearish for the price of oil. So I think the price of oil weaker over the course of the year, but with a lot of volatility. What do the technicals say on oil?
Yeah, I agree with you on that one, Jeff. The technicals, you can see here, excuse me, you can see here a weekly trend line. We briefly tried to get above it, but it got rejected. So it was sort of like a fake breakout. This was around the time Trump came into the inauguration, and like you said before, if the conflict in Ukraine and Russia ends, there will be more supply of oil, and also Trump is also talking about increase in production, so that is weighing down on prices. So we are likely headed to the 66 level here. I think in the next month or two, possibly even quicker. If we do breach those levels, we may even see these levels come into play
I
around
reckon
the
at
60
some
area.
time over the course of the year we'll be at $35.
Wouldn't be surprised. But yeah, this is a pretty much a descending triangle playing out.
Where's that high that's above it?
This one here,
No, higher. The one that's further to the
this one,
keep no, the next one up. What's that level?
that's 125.
There you go. Well, I'd be pretty confident we're not going to see that level
That
this
was
year.
in 2022. I think this was like at the height of the Ukraine-Russia conflict. I think that's yeah. So probably won't be. Yeah, I mean, assuming there won't be any more conflicts, we probably won't see those levels in a while. But yeah, the main trend here is down, and the fundamentals are back in that.
Did you know that Indonesia is one of the major exporters of oil these days?
Really? Okay, I didn't know that.
And they're the plus. So OPEC was always OPEC, and then they plussed. I think they added Indonesia and Bolivia or somewhere really weird as well. Not that, no offense to Bolivians, but it was the Indonesian bit that added the plus part to it. And Indonesia is like, I think it's like one of the top 5 oil producers now.
What percentage? How much percentage they
I
produce to the
can't
world?
remember off the top of my head, but I guess now that
Oh,
they've destroyed their rainforests, they've found oil.
interesting. Yeah.
All right. Before I get more controversial, should we talk about equities?
Yeah.
Gotta love Jeff. He's always got the
Dow
feels.
Jones. We'll be covering the Dow Jones, but I'll let you cover the fundamentals first, Jeff.
Yeah, you know what? We've had a couple of really good years on equities. And I think with tariffs and with inflation, I think we're going to have a little bit of a consolidation in equities. I think I mean, we saw the Dow Jones futures, even in our time zone before the US Open, gapped lower on the tariff news over the weekend. So the equities didn't like that so much. I think valuations, and I hate to talk from a equity analyst perspective, but valuations are crazy. I mean, they're like never been like this at all. Nvidia is a huge part of the equity indexes now. And I think last week or the week before, we had that new low cost producer from China that's going to be able to do exactly the same thing for like 1/10 of the price. Um, I wouldn't want to be long Nvidia, and I probably don't want to be long large caps in the States at the moment. Um, Chinese equities are going to perform poorly, I think, this year. They didn't have a great year last year, but I don't think they're going to have a great year this year either. I think the tariffs are really going to, the US tariffs are really going to weigh on China. No one really looks at Canadian or Mexican stocks, so we'll just leave those off. But I mean, anywhere that he's going to put tariffs on is probably going to be bad for their equity markets. The Dow Jones was up 23% last year. I would be very, very surprised to see anything like that this year at all. What do you reckon on technicals?
Yeah, so on the technicals, we've just retested the high here of November 24, and obviously we did get a sell-off here based off these tariffs on Mexico and Canada. So, like Jeff said, the way tariffs work is pretty much stocks get sold off. Number one, due to uncertainty. Number two, the valuation of these stocks actually decrease because there's more costs associated with them. The way I see the Dow Jones, I think we may actually consolidate for quite a while until these tariffs sort of taper off. So, however, I think in the long run, like from 3 to 6 months, I think US companies will benefit from Trump's policies. So we will be seeing like better than expected earnings. So we may actually see this make new highs. Not anytime soon, obviously, because of the tariffs and the uncertainty and the chaos that's happening at the moment. But I would say within the next 3 to 6 months, you may see a higher high. I mean, you heard of the saying, Jeff, the trend is your friend.
Have you heard the
worst
saying,
case scenario,
I'll sell you a call option?
Worst case scenario, you may see like something like this. This was when inflation was at its peak. So you may see some sort of slow down trend before we decide to take off. So in the long run, higher highs, but in sort of maybe the next 3 months, I would say consolidation. So support level here and here.
So equities have this thing. Oh, yeah, I've always had this view that equities have an inflation effect, in that the long run price movement on equities should always be positive while we're not in a deflationary environment. That happens until it stops. So inflation, some sort of inflation and growth. So inflation is another word for economic growth. Some sort of inflation is generally good for equities just because it does increase prices. The other thing that I think is going to start to weigh on equities, and this is like a long-term thing, is that we're having lower birth rates everywhere in the Western world. The vast majority of people put their retirement savings into the equity markets, but if we're not even replacing our population with new births, eventually it's just going to get to a stage where there's no one to buy them. That's Jeffrey's like 10 years like thing or 20-year thing.
It's like super long term, Jeff.
Yeah, but I mean, it's these are things that you need to consider. Eventually, I mean, you have to ask yourself, who's going to buy this today? That's why in Australia we have, the start of the month, the first week of the month is generally really quite good because that's when the superannuation funds allocate their money to Aussie equities. Anyway, we'll see what the government does for superannuation. I'm not talking about government policy. Just before we move on to crypto, I've had a question come through. We actually had a question, Mark, from Brenda. G'day, Brenda. We were talking about oil, and she said, I thought Russia was sending oil to Europe through other countries. They are. Um, the problem with that strategy is that the countries that Russia are actually friends with are the axis of evil, which sounds a little bit like something out of a James Bond movie. But we all remember the axis of evil: North Korea, Iran, Iraq, those sorts of people. Those countries aren't really supposed to trade with other Western countries either. But they are sending a little bit of oil through to Europe and into Canada, to the States via Canada. Apparently, let's say apparently, before the FBI knocks on the door. That's what I've heard as well. I have heard that that's the case. I've also heard that the government in the US is spending a significant amount of money to try and prevent that happening. All right. Crypto.
Okay.
I tell you, mate, I hope you're more across crypto than I am.
It's not looking good, Jeff. You know what's interesting with crypto? You know what's interesting with cryptos at the moment? There's about a last time I checked, a 0.83 correlation with stocks. So more specifically, the S&P 500. So one being a perfect correlation. So it's about. So it tends to. It's been following stocks recently, which is interesting.
Well, yeah, well, the
Uh,
interesting part about that is that everyone told us it was a safe haven asset, and now it sounds like it's a risk asset.
yeah, it looks like it looks like it. Uh,
That's where it's all these
anyways,
crypto
yeah,
people trying to make it all things to all people.
we are testing this very, very important level at the moment. So 90,000. If this gives way, I mean, we could come down all the way to 73,000. So it does look like it is acting as a risk on, risk off trade. So it looks like the markets don't want to take any risk at the moment. So they are selling crypto stocks. If the trend does continue, we will be seeing a break up to these levels, 72,000. And hopefully you can see some buying opportunity down here.
If you want to buy it.
So if you want to buy, yeah. So it just depends on how markets react to these tariffs. I mean, it could just be the market's freaking out temporarily, then things recover, but it could also be it could stick around for like the next month or two.
I don't know that tariffs are going to have much of an impact on Bitcoin and crypto. You know what I'd love to see that I probably should have pulled out before we did this was the percentage of people within the United States that own or hold crypto versus the rest of the world. The dot points that I came up with on crypto was that if there is dollar strength this year through tariffs and inflation, obviously strength on one currency means weakness on the other. So the other smaller currencies people will start moving their money out of their Malaysian ringgits and Indonesian rupiahs and into crypto just as a store of value. If the dollar strength does really ramp up, we already saw a little bit of that last year. There was some big buying out of Southeast Asia on crypto. If the dollar is strong, I think it'll get to a stage where people are moving their life savings into crypto just as a store of value. The other one I like, or the story that I like, is that there will be continued buying of crypto by ETF funds. I know that the big ETF providers were large buyers of Bitcoin before they released their funds, but I think they're just about on capacity now. Excuse me. So if they're going to get increased money come into their funds, they're going to have to enter the market and buy. I think it was JP Morgan. That's where Jamie Dimon is, right? JP Morgan. I think he's opened a crypto desk at Morgan's. He's normally been pretty good at picking the market. He certainly picked the New York property market by buying most of it. But I think the crypto ETFs, watch the flows. You can see the flows in those. If you do a little bit of research, I'd keep an eye on that and where the money is. When crypto is going to start to fall, you'll see I think you'll see the falls come out of the ETFs first. We have this thing in financial markets where we talk about fast money. So we have names for things: fast money, smart money. Smart money are generally family offices because they've got full-time people sitting there actually analyzing markets. We call that smart money rather than a fund manager. A fund manager is called fast money because they're going in and out and trying to make money. I think your smart money and those family offices out of the Middle East are getting really, really big now. I think they're probably going to be first movers on crypto when it starts when they pull the rug out from underneath it. So I'd keep a look out on the Bitcoin ETFs, but you don't want to look at the price. You want to look at the flows. So the price of the ETF will continue to track Bitcoin because that's what the underlying asset is. But what you want to see is the increase or the decrease in the size of the actual ETF fund itself. The other one I think is might become a little bit more of an issue this year, especially if there's massive dollar strength, is that some of those smaller central banks in Africa, South America, and in the Southeast Asia will start to explore, at least looking at holding their holdings of their currency reserves into digital currencies. Most of my thought at the moment is that if you look at Western countries that have been talking about using digital currency, they've been looking at doing something called CBDC, which is central bank digital currencies, which is a digital currency that is based or pegged on the local currency. So it just means that for all intents and purposes, we have an EFTPOS system. We don't have physical cash, but the government still controls the money. So it's exactly the same as normal cash rather than Bitcoin. I think for the smaller economies, places like Laos, those sorts of places, I think they might simply move to Bitcoin. There have been a couple of countries that have started to do that, simply because the infrastructure is already there and it makes it simple. I don't think any. What's the phrase? I was going to say any real country, but that's not really fair. I don't think any big country is going to outsource their central bank to nameless people on the internet. But I think some of the smaller ones might, just because it's just easier, right? Something less to do, and then it saves their balanced budget because they don't need a central bank anymore. So anyway, we'll see. We'll see how that goes. I think they're going to be the big themes. I've just in terms of full disclosure for everyone who's watching, I've been a little bit of a naysayer on crypto. When it came out, one of the things, or all of the things that they said were the good reasons behind Bitcoin, it's decentralized, there's no central bank, there's no interest rate, coming from financial services, I found all of their positives as negatives for me. So I've largely ignored it. I do keep an eye on it for clients who are looking at it, but it is certainly not something that I look at. I'd be spending a lot more time on mid caps in Australia stocks for my stuff rather than Bitcoin. That's my view. So Brenda has come back and asked, this is referring back to the oil question. What about India? India has, I think they've actually confirmed that they are selling some of the Russian oil through them. So obviously, any other country that's selling Russian oil is not, going to be in America's good books, which is why the countries that are doing it are countries that are already not in America's good books. We've had another client on YouTube asking or saying, thanks for the great feedback on the markets. You're welcome. What do you think happens to crypto if US or Euro banks default on their short positions? Oh, I love a default question. See, I think the US should probably default on their bonds just because it would make life easier for everyone. The US is currently at a stage where the interest expense on their treasury bonds is a massive, massive part of their GDP. This is why Trump is trying to reduce government expenditure. It's almost getting to a stage where the US can't afford itself. So if the US government went to a bank and looked for a mortgage to buy a house using our criteria that we use here, the bank would say no, right? You owe too much, you have too many debts, and your income doesn't really support anything. I'm not quite sure if the question is asking specifically about defaulting of short positions on crypto. If they default on their short positions on crypto, the short positions don't exist anymore. Banks and governments have the ability to simply wipe stuff off their balance sheet without having to really adhere to accounting standards. We all
I think we need more info on for that question.
Yeah, I think any more detail on that one would be good. Mark, did we miss anything?
Doesn't look like it. No, I think we've covered all of it.
What about let's you know what? Let's have a little chat about different sectors in the American stock market. So I still like the small cap sector over the large cap sector. I think that this year you're probably going to see the Russell do a little bit better than the Dow Jones. I think people who are looking at and really active in that small cap sector will continue to find value on those companies. And those small companies that kind of do one thing and do it really well, I think they're going to continue to do good.
I think the small caps are super sensitive to interest rates. So I think once
Not
we
if they're
start
listed. If they're
seeing,
listed, they just issue more shares.
yeah, I mean, this is like from what I've read and what I've observed in the charts. They're super sensitive to interest rates. So when interest rates come down, small caps generally like that. So they are being weighed down at the moment.
Yeah.
There might be
All right.
like specific companies here and there, but overall, if you look at the Russell as a whole, it gets weighed down on in a high interest rate environment.
Well, the Russell's too big now. That's the problem, right? So, I mean, the way the US market is split up is that we're going to take the top 30 and we're going to stick it in the Dow Jones. And really, given the inflationary effect on markets and stuff, the Dow Jones should probably now be about the top 100 stocks. Then you've got the S&P, which is literally everything. And then you've got,
Yeah.
I don't even know what the criteria is to be in the Russell. It's just, people just say small cap.
I
But
think
what makes a small
it
cap? A
might be a
small cap in
market cap.
Australia is different. Yeah, it is. But it's an Australian small cap is different to an American small cap, surely.
Yeah, it will
I
be.
don't know.
Yeah, it'll be different rules.
I don't know. Look, one thing that we didn't mention that I do want to mention that I like is I think uranium's probably going to have a really good crack in Australia this year. Um, I'm fairly sure we're going to get a change of federal government. I'd actually be extremely surprised if we don't. Um, Dutton's already talked about nuclear reactors in Australia. If he's going to have nuclear reactors in here, he's going to have to get rid of that silly old rule about there only being 3 uranium mines. Um, we are the largest store of uranium on the planet. I think the fact that we're not exporting it is a drag on our economy and a drag on the future of and our children's futures. We didn't get anything back from that question about defaults on the US and European banks. If you want to come back to that, Mark or I will just get back to you directly and answer that question. Thank you all very, very much for watching and listening today and putting up with my idiosyncrasies, if nothing else. What is this will be uploaded to our trading room that's within our client portal afterwards. There's also a lot of other great information that's on there as well. So if you're a live client of ours, I'd urge you to have a check of that. We generally do a video every Monday that kind of, instead of going over the entire year, we'll look back and wrap up a week. So we do a lot of this sort of content here for you guys. This will also be put up on our YouTube channel when it's finished as well, so feel free to watch that over and over again, although I could probably recommend movies. This is what our team does. Our team does market research. We want to give you guys as much front foot information as we possibly can. Trading isn't easy, but I think we kind of tend to overcomplicate it, so we try and make it easy for you guys. So all the best. Have a really, really good 2025. I think in Chinese it's Kung Hee Fat Choi. All the best. Thank you, Mark. We'll talk to you later, mate.
Bye, Jeff. Yeah.